Every time the Fed speaks, the market explodes. Candles going up and down, stops getting blown. Traders are either bragging about their biggest wins or they crying over their biggest losses. So the real question is, should you even be trading during Fed news? Or is this just a trap? Stick with me, because by the end of this video, you'll know exactly how to approach Fed days, the risks some traders ignore, and why pros thrive and retail traders just get wrecked. Okay, so let's break down exactly what happens on a Fed day. When the Fed makes announcements, whether it's interest rates, inflation comments, or Powell's just at the mic, the market goes wild. Volatility spikes instantly, liquidity dries up, spreads widen, and even if you write about the direction that you pick, you can still get stopped out. It's not price moving, it's algorithms battling it out in milliseconds. And retail traders, they just get caught in the crossfire. Think of it like stepping inside of a tornado with no protection. You might catch a ride, but you still get tossed around. Even with all of that, there's still room for opportunity. So let's be real. Where there's chaos, there's also opportunity. Some traders, they love Fed days because those big moves during Fed days can breed big opportunity. If you know what you're doing, a single setup can move in 10 minutes more than the stock has moved in the past 10 hours. Scalpers and experienced traders, they prepare for that volatility, and they have rules and setups that prepare them and let them know when to strike. But here's the catch. They don't just wing it. They plan levels, they mark out liquidity zones, and they wait for the market to calm down before they actually take action on a Fed day. Now, there is some risk to trading on Fed days, but here's the dark side. Most retail traders, they don't survive Fed news trading because that speed and that randomness, it triggers emotions, FOMO, fear, revenge trading. The Fed days, they amplify all of that, all of those emotions. 1 second you up 500, the next you down 1,000, stops get slipped, breakouts fail instantly. If you're not disciplined, this is where your account can get blown. So here's the practical truth about trading on Fed days. Avoid trading the first 15 to 30 minutes after the announcement. This is when the market is the craziest. And if you do happen to trade, cut your position size in half. Widen your stops, but always define your risk. And most important, I can't stress this enough, wait for confirmation. Let the first move shake out and then look for structure before you enter. And if you're brand new, my honest advice is sit it out. Watch it. Study the price action. Take notes about it. You'll learn way more from observing it than taking the risk and gambling and then blowing your account. So finally, Fed news is like fire. It can cook your food or it can burn your house down. For new traders, it's way safer to just sit on the sidelines. For experienced traders, opportunity exists, but only if you have tested strategies and your discipline is top notch. So next time you see a Fed day on your calendar, ask yourself, are you trading with a plan? Or are you stepping into the chaos with zero armor on? Because the market is not going to forgive either way. Now, if you guys found this helpful, hit that like button and subscribe. Let me know down in the comments if you guys trade on Fed days or if you sit them out. Once again, focus on the process and the profits will come.